Well, welcome everybody. It's the midweek update. It's time for live markets, right? It's the 17th of September, Wednesday, and it's actually a Fed day. So let's just get started. Please type into the questions, or I should say the chat box, if you guys want to share some trades. Make sure you take responsibility for whatever trades you decide to follow along. You guys get it.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So our current outlook has not changed. It's been super bullish. Let's just jump straight into it. We've been a little bit hesitant here at the top, and it's signs of, okay, we're going into a Fed meeting. It makes total sense to me, right? I would expect as much. So we do have the statement today. I mean, that's pretty much all we could talk about. It's a 25 basis point cut is expected. I've heard arguments of a 50 basis point, which would be kind of a surprise. Maybe it would, and it would definitely cause some sort of volatility in the markets. I'm just not sure it's going to be up or down. However, it's going to hinge a whole lot on the Fed speak moving forward. Is this the first cut? Are they going to get pretty much aggressive? Or are we going to do a 50 basis point cut, which will cause a massive volatility surge in the markets, and see what the Fed says moving forward? So a lot of it is going to hedge on what the FOMC says after the cut. Now, if it is outside of expectations, meaning there is no rate cut, I doubt, but I mean, if there's 50 basis points, then we're going to see some serious volatility. Now, the focus needs to be on the reaction of sentiment. And what I mean by that, folks, is sentiment has driven us here. The expectations of aggressive Fed cutting is what got us to this point in the first place. We set new highs last week on all of the majors. So a lot is built into this. I have also had many discussions with you guys, and this is kind of that rule of thumb: buy on rumor, sell on news. I've seen lots of corrective actions come on a market that gets exactly what it wants. So just be leery of that. Now, I don't want to be anticipating it. However, we need to follow it. So this is going to carry over the next few days. If you guys have been noticing in the markets themselves, specific stocks are moving higher, specific stocks are moving lower. It seems to be, once these markets have been getting toppy or higher and higher and higher, I'm not seeing gross sectors move higher, gross sectors move lower. I'm seeing very specific individual stocks. I've actually seen that for a few months. So I blabbled on one slide, and it's really getting annoying. So weekly outlook is 0. Our monthly outlook is still a +3. We're super extended here. Let's take a look at the chart. Let's just jump straight into it. So I gave it a 0. I would be comfortable actually giving it a -1. And the reason being is just this. It's this beautiful surge. You know, when the markets surge higher, they usually correct. They surge, they correct. So here's this big surge, good push, breaks into new highs. And we got this little bit of a consolidation, or what could be or pullback. So I gave it a 0. I could give it a -1. Actually, to tell you the truth, folks, I'm more of a -1 on this, just to see, just based on the price action itself. Unfortunately, we've got a massive volatility that's about to hit these markets in an announcement. So I could easily see this thing have a gigantic green candle higher, or I could see a massive red candle and falling back down to moving averages. Remember, buy on rumor, sell on news. It really just depends on what sentiment wants to do with the announcement. I truly don't believe it has anything to do with the number itself or what's said. It's just going to shake this tree, and we're going to see how many loose pieces of fruit just fall out of it. Or if this is indeed solid enough to where if this tree gets shaken, it just stays. And that's kind of the power we have to follow along with. So it's the reaction. We're poised for a pretty good corrective move. If the numbers are good and bullish, I would not be surprised to see a big round of profit taking, huge move to the downside, and then maybe some buyers stepping in. Now, if the buyers don't step in, then we've got what could be a change in sentiment. But we won't know that for a couple of days. So we're going to see a tails or some large candles over the next couple of days. It's where they end up that matters. And what's great, folks, is we've seen this before. You just have to weather the storm. We've seen this. We've seen these shadows and tails. We've seen this dark cloud cover and stuff. So when the markets do correct, this is exactly kind of what I'm expecting. I would not be surprised to see a big move to the upside and then have it come back down. So it's going to be volatile, to say the least. I guess that's where we're going to start. So let's go into our sectors, and I want to see if there's anything, showing strength or weakness. And it's not. It's just kind of generalized. I mean, lots of just purchasing throughout all of the sectors here. Money being put to work, and I truly believe it's the anticipation of rate cuts coming in. They're pricing themselves in. We make a lot of comments when we talk about our economic news, and you can see weakness is not good for an economy. Slowing down, higher jobless claims, lower manufacturing, things like that. It's not good, but the markets will love it because the anticipation of cheaper money becomes an option, and so it's good to borrow that and put it into the markets. So they're contrarian, if that makes sense. At some point, it gets saturated, meaning that okay, all the money that wants to be in the markets in there. Now we're stuck with an economy that's actually probably going to slow down. I mean, if these numbers are showing what they're going to show, and then it becomes wait a minute, and then the markets start to fall down. So it's a tipping point, and I just don't see us there yet based on some of the purchasing that we've seen in the overall markets. I don't want to say this is the day, but these are the days that can cause these corrections. Years and years ago, the dot-com bubble burst actually was an announcement from the Fed that came out before their scheduled event, and they cut 50 basis points, and that kind of started the pop of the internet bubble. But the argument is, did and it was Greenspan, if you guys can throw your minds that far back, did he cause it? Did the Fed cause it, or was it something that was inevitable? A 50 basis point was kind of what the markets wanted, showing a lot of easing, a ton of cheap money. However, it had already expanded so much that it became, actually, that's kind of scary. And the markets started to fall apart. I'm not going to say this is the exact same situation, but it feels similar. The important part is to not react until it happens. So we got to follow sentiment, set aside of our opinion, and see how this works out. So let's get started with some of the trades that you guys have suggested. We'll start with Mike here. He's got Lennar, housing. It's been pretty interesting. I've been looking at, let's take a look at some others real quick. Toll Brothers, KBH, and they're all very similar. We did get a housing number today. It was pretty much showing a little bit of contraction. However, if we are going to get interest rates cuts, you could maybe lean towards, maybe some refinancing going on, or maybe another push to housing as it gets a little bit cheaper. It just depends on the money that's out there. So thanks for this, Mike. This is Toll Brothers, and it's in a bull pullback. It's done this a couple of times, gaps up and down. I mean, I think these last few days is just in anticipation of today. And it's been kind of funny because we always talk about today. We've been talking about the Fed meeting next week, the Fed meeting in 2 weeks, the Fed meeting, day after tomorrow. But guess what? Today's the day. But you can see the movement that a lot of these stocks have had, and keep that in mind, folks, as I go through other charts as well, because there is gapping and moving down and shadows, things up and down. But however, the pattern is still holding true. So I do like it, Mike. I think it has a chance. It's in a very specific area when it comes to interest rate sensitivity. So that's a pretty good chart. I wrote that down on the bull side. Here's NXT, Next Tracker Inc. Nice kind of a high base going on here. A little reluctant. I've got some examples we'll talk about from last week that I've just seen a lot of, and this seems to be kind of the same idea. It wants to break out, but then it doesn't, and we're just kind of chomping around. Definitely keep this on your watch list. You're going to need a little bit more out of it. This seems to have a tendency to react pretty aggressively, so you're going to have to kind of keep an eye on that, Mike. If it does, this will be one that you're going to have to try to catch. I'm not sure about the company itself. I know, obviously, look at this technology and solar. solar's had its push and pull, the cost effectiveness and some of the benefits that solar had, and the discounts that it came with when it comes to some government, rebates, things like that. But those are all kind of moving away. So it's kind of a sector that's a little bit choppy right now. You can tell by how it acts, but maybe more of a sideways to maybe an up play. But you just got to be patient with that. You know what? I'll go ahead and put it in the up move or the bulls, just because I want to see if that can break out. Thanks, Mike. Appreciate you, buddy. Let's go to SIG. Mason's got a couple. Signet Jewelers, luxury goods. Take a look at that. Out of Bermuda. Who would have guessed, right? If you guys have Newmont Mining handy and some of the gold stuff, they're decent. It's still up there at those highs. It could be just kind of a flight to safety, something physical that you can grab. A lot of the cryptocurrencies have floated off of their highs. They're bouncing around. Yesterday they were way up. Today I don't even know. They're probably back and forth. But I do love this ascending triangle pattern. It's one of my favorites. I like it a lot. And it looks really good right now because it's at its high. However, we've got the 300-pound gorilla in the room that's about to come out here in the next little bit. But definitely a bull. Let me go ahead and put it in there. Thanks, Mason. Let's take a look at a couple more. VST. Utilities, power products, those companies are also doing good. NRG, if you guys want to write that down real quick, was one on our list from a few weeks ago. It's still holding in there. It's back and forth, but it's still at the top end. Very similar. VST, it looks like it could be holding in. Be patient on this. We could see corrective action if we see another surge into the risky stuff. If the traders like whatever the numbers are and sentiment just surges out, and it could be like that last push to the upside. A lot of these utility companies, energy companies, I don't think will participate. However, if there's some weakness in there and there's some worries, I just got to see that flip-flop. Right now, the markets have priced in weakness, but weakness isn't good for the economy in the long run. So eventually, when that teeter-totter hits, energy would be a flight to safety. NVIDIA wouldn't be. So as soon as we see that start to push pull, then we know that there could be a change coming. So keep that on your watch list. I'm going to leave it off for now. Dino's one that we talked a lot about. I've traded this a couple of times. I did it very well. I missed most of this move here. But it's still that high base, that energy, very specific. I'll add it back to the list. But you got to be patient with it. And I haven't really expected anything to really follow through as of late. And nothing really has. So unless you happen to catch Oracle before its earnings and stuff like that, or Warner Brothers before it had a rumor of being bought out. But those are flashes in the pan. Most of the stuff has been kind of slightly higher, slightly lower, just sideways. So thanks for that. Let's go to a couple of bears. Here's CL, Colgate-Palmolive, rolling over. Nice breakdown. I do like this on the bear side. Nice confirmation, a little bit of an anemic bounce. That's a good one. Let me write that down. Just an area that has been out for a while, and you'd imagine the consumer defensive, toothpaste seems it would be more important than I guess it is. I guess I shouldn't say they're just toothpaste. Anyways, some of the consumer defensive has been selectively beaten down. Now there are other consumer defensives that are doing pretty decent, so it just depends on where you look. Let's take a look at Deere, because I've got one on my list that I thought was very interesting. So Deere, it does have this nice stair step down, and it's got the shadows, so it's reluctant to really break too far below that gap that it had, the low point of that gap, but it is showing some weakness. Since we're chatting about it, I'm going to go ahead and put it on our bear watch, but take a look at Caterpillar, which is on my bull watch. Maybe there's some contracts. I didn't get a chance to really peruse any of the news on it, but that's a big search. I don't know if that's just some sort of, hey, you know what, I'm going to dump some money into Caterpillar before this announcement today, but that's a good push. I'm sure there's news on it, but I do like the chart. Feels a little overextended, that's fine, but something sideways up, some sort of a credit on that might be good. So I have it on the list. Kind of funny, right? Deer's going down, Cat's going up. Very selective. I mean, they're the same. They do the same things. I've been seeing a whole lot of that lately. All right, Bill's got Pan W. So Palo Alto Networks pretty much got beat down, but it seems like it's climbing its way back up. I would be He's looking at a 200 210. Thanks for the trade. A 200 210 bull call spread for about 2 weeks. And that makes sense. Where it's at, basically, up to just above, well, basically the high that it's set. So it's an aggressive bull call spread, probably a +3, +2. And it seems pretty extended. I'm fine with this bill with 2 weeks, as long as you're okay with maybe a little bit of a pullback or some consolidation before it starts to move. Actually, that would be ideal for 2 weeks. You're going to have to sit through a whole lot of messy stuff here in the next hour or so. But this could easily maybe have a gap up here and then retrace and then work its way back up. So when you get aggressive, like a +2, +3 trade, I'm totally fine with it, but just buy into it. Stay with it, buy into it. Don't try to get cute and save a couple of bucks. If you're going to go for it and allow it to play itself out. When you take a look at some of the volatility in these candlesticks, huge corrective action, but it did eventually come back, didn't it? Gap down, but it did eventually come back. So here it is coming back, and maybe we get another gap, and then maybe it'll eventually climb. Just be mindful of the pattern of the stock you've put your trades on, and try to follow along with it. Make sure you just follow your rules. So that's good. Thanks. Thanks, Bill. All right. David's got a trade on. Let's see. OKLO. Let's see. 17 October, 85.90. Should I let it run? Question mark. And it's October, though. Well, here's my favorite answer. Whatever's in your plan is what you should do. If whatever happened in this stock has changed your mind on the whole reason you got into it, you're following a plan that you don't believe in. Hindsight will always change. It will make us doubt. But living in the moment will pull all greed and all fear out of us. You're $4 ahead of your max gain. Just by letting it stay above 90 over the next few weeks, you will see more and more money come back in. So it's a very tough spot to be. But the ideal is you need to follow your rules. If your rules say set it and forget it, well, guess what? Forget it. Now, you do have a benefit here because you are in the money, right? You're deeper in the money. But I promise you, as this goes from 94 to 93 to 92 to 91, you're going to be very stressed out. That's part of this game. So I'll say it again, and thank you for putting yourself out there, but this is tough to do. You got to follow your rules and believe in them. What I would do is know, hey, look, I'm winning. I'm ahead. Everything's great. I do have a lot of time on this, but I put my focus elsewhere. Look for another trade. Look for something else. It's a tough place to be, but it's a great place to be. Good choice of strikes. A little bit long on the time frame in hindsight, but it's working out. Even if it pulls back to 90 and goes higher, it's good. I would leave it alone. Follow your rules. Thanks for sharing. Good to see you. Thoughts on selling puts on the VIX? Ooh. Not a bad strategy. Jazz, seriously, not a bad strategy. If it stays below 17, I'm thinking of rolling it 30 days out for additional premium. These, I mean, if you take a look at this, and these do settle at zero, especially the futures on the VIX. They always do. So they'll gap up and then they'll trade down, and then they'll gap up and trade down. And this is a very comfortable place to be. This is a gap up. A VIX strategy here, just selling the shorter term volatility with this announcement. It's got a good probability to it. However, be very mindful of how you do it. Don't get super greedy, and make sure that you range it. So like a I don't know if they have it like an 18-20, like some sort of a spread on it, or do something smaller position size, stuff like that. Being straight up short does carry a ton of margin, but if you could do something like a credit spread, it reduces that exposure. I know it sucks because the volatility is what you're trying to say. He was thinking of rolling it 30 days out for additional premium. You could do that if it doesn't start to drop, but your initial starting point, Jazz, is what I would focus on. So, folks, this is just a volatility play. It gaps up. See if you can't get a couple bucks on it. You will find the transactions can be difficult because the premium won't work the way you want it. It's built into it, but it won't be built into it as high as you think. But thanks for sharing that, Jazz. That's a cool thing to be aware of, because we know that volatility's in there or in the markets, and then it's going to disappear somewhere. It's going to disappear in a move to the upside or the downside, but not a bad strategy. All right, let's get moving on. Let me go through a couple that I had. Well, first off, let's take a look at last week's trades that were sideways. Now, DEC was sideways to down. I loved the move to the upside. We talked about the double top here. But then we realized, hey, this might be a range bound because it did come back of this. It didn't set a lower high, did it? And we said it might turn there, and it kind of did, but it stayed sideways. I think I drew a box that was pretty wide. I think I drew like that, but it turns out it bounced here. And it might be playing a game back in there. So sideways to down, in this case, sideways worked. Let's go to, what was the other one here? VSCO. You guys brought this to me last week as well. VSCO, we said sideways to up, and it did kind of push a little higher. We're talking about that 200-day moving average, maybe kind of sticking there, and it just is stuck there. So if you did a +1 trade on this or 0, it's still going pretty good. And then even the financial ETF itself, sideways to up. It was pushing higher, thinking we could break above that, and guess what? We didn't. We just flatlined and then kind of moving sideways. So the sideways stuff has been working. The +1, 0 to +1, 0 to plus, or -1 has been working, and I've been seeing it a lot. Let's take a look at another trade that we talked about yesterday. This is the only bear that we had, which was PayPal, and I thought it was really neat because it could, I think I used the word leak below this area, and it looked like it was not going to leak. It looked like it was going to really drop. But what did it do? It came right back to its stasis. So 0 to -1. If this was a credit spread, you're sitting in a pretty good spot. And that's kind of what's been going on. Now, do I expect this all to change today? My opinion, I think a lot will. I don't know if every single stock will, but yeah, I think we get a real kick to the markets, and I don't know which direction it's going to be. We've been talking about this date since the last talk, and the markets have definitely. Let's go back to it here. The markets have definitely priced in something bullish, haven't they? So we will see some sort of a reaction today. That is for sure. All right, let's see if there's any others. I wanted to talk. Oh, a couple more here, folks. GNTX is one that we kicked around. I think it looks nice today. Take a look at this. Consumer cyclical auto parts. By the way, folks, was it O'Reilly we looked at last week? Just pulling back. Just a nice breakout, but it's pulling back. There's a few of them. Was AZO one pulling back? So the auto parts stores are doing great. I just came across GNTX because it was on our list, and it just seems like this one's just popping up today. Good possible trade to the upside. Cisco Foods. I thought that was pretty interesting. It's not quite there. This might be more of a sideways trade, more of a +1 trade to a 0. And then I did show you Caterpillar. Another one that I had up was Walmart. And when we talk about the selectivity, I talk about, hey, we look for top-down approach when it comes to sectors. What are the sectors doing, so on and so forth. This is what throws you off. So here's Walmart. There's probably some sort of a news or something like that. But let's go to its exact store. This is Target. I mean, you're either in favor or you're not, right? Let's see the example again. This is Caterpillar. This is John Deere. Okay, so that's kind of what's bouncing around. But if we trade just the price action, I found that +1s and -1s and 0s can work a little bit. And if you have a +1 on and then it turns into an oracle, oh well. I think things will get a lot more volatile here in the next hour or so. Okay, I have got this built out for our trades today. Let me share with you. So here we are. This is what we got. I carried the sideways over from last week. Okay, guys, so they're not new. This PayPal is from last week as well. But yeah, these are all new up here and then down here. So those are the trades. don't be too quick to jump on it. Anything you want to do, which is like volatility, like Jazz brought up. I mean, a volatility trade is kind of neat for you guys that want to do that over the next day or so. Or just kind of let these markets play themselves out after this announcement. But don't be too quick to get rid of any of the trades you have, your bulls, your bears. I mean, thank you for sharing that OKLO when you're in the money by $4. You're getting into a Fed announcement. This thing, it could gap up to $100. It could gap back down to 80. And I understand that that's a tough place to be. But if you believe in your plan, you follow it, whether it works or not, it's over the 100 trades that matters. So kind of a fun teaching point. I appreciate that. All right, guys, great class. Great class today. Thanks so much for joining me. And let's see what happens with the Fed here. See you guys.